Sign up today for a 7-day free trial at alerts.chartguys.com. Hey everyone, checking in on the market. So we had some further downside today. The bulls did show up to buy some dip, and after hours we had news come out that Buffett and the Berkshire Hathaway are buying Amazon. So Amazon's up $30 after hours, a little bit of boost. SPY is up 40 cents. Tech sector up a little bit, so a little bit of extra momentum heading into tomorrow. So we have lost the daily uptrend. I traded SPXS today because my rules that I've been following for the last 6 weeks plus of not trading bearish while in an uptrend, that's no longer the case. So I've got the green light to trade bearish. We'll just look at that trade real quick. It was on the 5-minute time frame, and we had the start to the morning, and this is really just the bounce on the hourly time frame looking to form a lower high. So looking at things on the hourly chart, we had the low of yesterday, the high of pre-market, and the morning top is pretty much the RSI. That's our first oversold bounce. The hourly RSI went from 25 to 45, and then we saw weakness. So I was busy trading other things in the marijuana sector to start this morning, so I didn't do anything until right about here. So we saw the start to the day. We pulled back significantly enough, and we got close to the low of the day that it looked like our top of the bounce on the hourly time frame had been set. From there, we saw a bounce, and this bounce is where I entered SPXS, anticipating it would be a 5-minute bear flag. I was watching the 4 and 8 exponential moving average resistances, which rejected the price, keeping the bears extremely strong. And the reason I chose this point is because I could say to myself, all right, if we set this lower high and drop to a lower low, we're very likely to break the low of the day right after that. And so that's what I was looking at for the significant follow-through once that low did break, and that's exactly what we got with bear volume behind it. So that was my reasoning. My stop was above the high of the day, and I would have risked an acceptable amount. And then it ended up, we had this double bottom down here, and right about here I had to leave the computer for a couple hours. I knew I was not going to look at the screen for about 2.5 hours, so I said, all right, this is a nice, solid, multiple day maker, and I want to lock that in. So I'm going to put my stop loss right above this bounce here, this little 15-minute high, and then we held the low, or we broke it by a couple pennies, but I considered that a double bottom, and I put my stop right above there on SPXS, and in the end got stopped out right after I left and came back to see that it was a good thing I got stopped out. So that's the way I managed that trade. Fresh, clean slate back into tomorrow, and it's all about the hourly time frame at this point. Can the bulls change the hourly trend? I'm watching the low of the day, the high of the bounce, and we need a clear hourly higher low and higher high to change that trend and try and shift this momentum back on the daily time frame. As we know, weekly consolidation is potentially close to taking place, but as I've been saying in the chat room to remind people, we just came from the all-time highs. Yes, we're losing the daily uptrend. Yes, are these short-term indications for profit taking. Remain protective, potentially entering some hedges, but we're just looking for a weekly higher low unless daily bear volume tells us otherwise. IWM on the daily time frame, support to hold was down at 155.47. We held 155.68, still holding the daily uptrend at this point on IWM. And the bulls want to see an hourly trend change, and at this point, it's just a V-shaped recovery. High of the day, low of the day, and then the close. And if we cannot break 158.15 tomorrow, we're going to look to pull back and hold 155.68 to have an hourly equilibrium to be watching. So the key will be, how do we set up pre-market with this resistance? And then once that bell rings, if we cannot break that level, we're going to look for some profit taking to stay in an hourly equilibrium. If we do break bullish, then that's going to keep these bulls strong with another daily higher low, and we'll be looking back up at the recent high of 159.61. QQQ. So QQQ is losing the daily uptrend as well. We pulled back. Again, the lower wicks. We're certainly familiar with these lower wicks, which have kept the bulls in control so long. What stood out yesterday is SPY and all these sectors closing at the low of the day. That shows bearish momentum into the close, and that bearish momentum carried into today. But if we have a wick, that's when the bulls have some kind of support to be going off of. So on the hourly time frame for QQQ, again, low of the day, we might just be setting a lower high on the hourly, and if we break the low of today tomorrow, we'll expect another leg down similar to what happened today. Broke the low of yesterday, got a flush down, so that stair step, lower high and lower low on the hourly pattern could continue. It's just if we can hold the low, that's why the low of today will be very important tomorrow, because if we can hold that support and then change the hourly trend, that will be a shift in momentum. QQQ, still a higher low every weekly candlestick now. So when I look at that pattern, we're not really seeing weekly consolidation just yet. We have to break the low of the previous week. Otherwise, it's just a higher low every week. And SPY is the same way still. So SPY, I look at the daily chart and I say, yes, the daily uptrend has been lost. But I look at the weekly chart and I say, we're not seeing weekly consolidation yet because it's a higher low 5 weeks in a row and that pattern hasn't broken. XLF, bull flag on the daily time frame potentially, extremely strong. We've been holding the 12-period exponential moving average support for the last month or so. And the question is, can the bulls change the hourly trend to have just another daily higher low form? And if the bulls can break 27.88 and 27.95 first thing tomorrow, it'll be looking likely that this is a daily bull flag trying to head back to higher highs in 2019. Biotech sector, 82.43 is key support. And the close at the high of the day definitely shifted this momentum. This is now the daily range that we are in. 82.43 and 82.80 are our supports. And the resistance is up there at 87.71. So the bulls really want a green day tomorrow to stay in this range and try and make it back to the midway point, because we could stay within this range into next week, into mid next week, and that would be a benefit for bulls, because if we do break down below that level, this weekly time frame is going to start getting a lot uglier for the biotech sector. So bulls defending support. The question is, can they do anything with it with some bounce follow through tomorrow? And the healthcare sector is still strong as well. This is a scenario where we broke the pattern of a higher low every day. We had that pattern 4 days in a row, and it broke with no follow through. And that's the highest close on the bounce at this point. So the criteria that I laid out maybe 3 or 4 days ago on what could be a scenario that leads to the S&P 500 losing the daily uptrend, it was oil confirming the daily downtrend, which it has done, and it was the healthcare sector giving us this equilibrium of the lower high and then a clear pullback to try and form a higher low. If that's as much consolidation as we see, that favors the S&P 500 bulls. If we are unable to see continuation and we do fade back down in the healthcare sector, then that's a scenario where SPY could see some continued weakness. So it's essentially, if this is a daily bull flag and we keep heading up towards 91.03, the S&P 500 bulls are going to be just fine in the short term, in my opinion. It's a kind of scenario where it's almost gone opposite. We were saying, 2 weeks ago, the fact that the S&P 500 is holding up so well in the healthcare sector weakness has me bullish short-term the S&P 500, and now we have the healthcare sector holding up really well in the face of SPY weakness, and it's this scenario where if SPY is going to get real weak, we have to see healthcare, financial sector, and tech sector all with red days, and that's certainly not the kind of day we had in XLV. So the volatility index, we watched the downtrend resistance line that did break. The falling wedge broke bullish, but not much follow through. We are holding it on the back test, but as I said in the video yesterday, when's the last time we've seen 2 very solid green days in a row? And the last time that happened was the December collapse. And since then, that has not happened. And to start today, it looked like, wow, this is going to be it. This is our second green day in a row. And it faded as the bulls bought the market dip. And after that quick push up, we gave not all of it, but most of the day's gains back. And we're going to have to be watching for strong closes. Again, those closes indicate so much in terms of where momentum is heading. When SPY closes at the low of the day, it is much more notable than when it doesn't. And if we look at the daily time frame, how many times has SPY closed at the low of the day in 2019? I'm seeing 1, 2, 3, 4, 5 times, aside from the absolute bottom. So 5 times in a span of a bunch of days. That's notable. Not a lot of weakness at the end of the day. So it stands out when it does happen, just like yesterday. So oil has changed the daily trend. We were in an uptrend. We lost the uptrend. This lower high and lower low confirms we are now in a daily downtrend. This tells us weekly consolidation is clearly underway. Anything above 62.98, I take that back, it's 54.50. Anything above 54.50 keeps the weekly uptrend intact. That's the must-hold level. And again, the amount of space that the bulls have to work with, we're going to anticipate that at least the first time around, the bulls will be able to maintain that support. It's 12% away, and the daily RSI is already down in the low 40s. So if we were to head down towards that support level, the daily RSI would very quickly get oversold. Anything under 64.73 is now just a lower high. It's going to be up to the bulls to change the daily trend back in their favor for us to say that the weekly higher low has been established. So again, keep an eye on oil, because oil gave us a little bit of a heads up. Losing the uptrend first, then SPY saw weakness maybe a week after that, and going to continue monitoring that correlation. Unless we got natural gas daily inside bar the last 2 days in a row, pretty much non-event. And we just rolled over this candlestick, so inside bar today, and now we got an inside bar on this candle rolling over. Things tightening up. I'm watching that 4-hour uptrend. It is still intact. 2531 was key support. We held 2535. If we lose this 4-hour uptrend, the top of the bounce has been set, and the bulls will have to form a daily higher low compared to 2442, and then change this daily trend with a higher low and a higher high. But we have not topped out on the bounce until we lose the 4-hour uptrend. That tells us that we have to form that daily higher low after that point. So all in all, decent little recovery for the S&P 500. The question heading into tomorrow to end the week, is it just another hourly lower high and lower low? It looks similar to the last bounce, and that occurred during extended hours, so there's no real volume behind it, but pretty similar. And the question is, do we roll over tomorrow, or can we recover from this hourly chart? This right here is the 12-period exponential moving average, and I'm going to be keeping an eye on it because the price has respected it the last 2 days as far as resistance goes, and it'll be noteworthy for me if the bulls are able to get over that level. It won't be a huge deal because I go back and it seems it hasn't had a lot of historical impact as far as very clear levels, but it's been very clear the last 2 days, so that means it's worth watching for a short-term little indication. So I appreciate you watching. Hope you do good things out there. We're going to tune back in over the weekend, and I hope you have a good rest of your night.